Well, we know that oil has gone higher in the current Israel-Iran fighting. And our guest says even if this de-escalates, sustained damage to Iran's infrastructure could strain the country's oil output for years. Let's bring in Ben McMillan, Chief Investment Officer at IDX Advisors. Ben, thank you very much for joining us. Because it does appear both sides have gone after energy infrastructure, although my understanding is that Israel has not deliberately targeted Iran's oil export facilities. I may be out of date on that one, but Iranian production could be damaged for years.
Well, yeah, I think you hit the nail on the head. I think Israel has, at least my understanding, consistent with yours, is that they've deliberately avoided really going after oil infrastructure, I think, to send a message. And, there's a lot of talk. Let's kind of zoom out first. When you look at how big a player Iran is in kind of global oil, it produces roughly 3 to 4% of global supply. So it's not insignificant by any stretch, but it's also not a huge player. The majority of that is going to China, so it really, impacts them. More recently, there's been a lot of talk about them closing the Strait of Hormuz, and that could disrupt, 20% of global oil supply. Now, that said, Iran has threatened that multiple times in the past. It's very difficult from a geopolitical perspective. The U.S. as well as other allies have a huge naval presence there. It's technically difficult. From folks I've talked to, it's 60 miles wide. Most of it is in international waters. So I think that's why we're not seeing the market kind of really price in that threat. If that was a credible threat, I think oil would already be north of $100 a barrel. So that brings us back to kind of long-term damage. And if we go back to kind of the corollaries that we have, the Iran-Iraq war of the 80s, we saw that, damaged oil facilities, were offline for years at a time. This is a country that just does not have the expertise to get these back online. So I think that's the thing to look for, is if we start to see excessive damage to oil facilities, even if it's not deliberate, that could really start to stress, supply for years to come.
That's interesting. So even if, OPEC, we know still has spare capacity, but that's interesting that Iran could be crimped for quite a while. Of course, in the past, I think you referred to this, Iran has made noises about blocking the Strait of Hormuz, or there's been speculation, but even technically, apparently physically, it would be hard to do. It looks easy on the map, but it would be hard, apparently.
Well, exactly. Like I said, I talked to somebody who's much smarter than me in the space, and they were saying, again, just when you look at even forgetting about the U.S. presence in the region, the Fifth Fleet out of Bahrain, just with Iran's current capabilities, current naval capabilities, it would be technically difficult to kind of really implement a sophisticated blockade. And then you layer on top of that, they rely on the Strait for their exports. So
right.
Again, it's one of those things that's just not really feasible. And again, that's why we're not seeing the market price that in. Now, that's not to say there's a lot of rhetoric. And again, we've got a White House now that, likes to go to X to, really, speak their voice. So, this is a situation where, if anything, I think, we're seeing elevated vol prices based on a lot of the kind of rhetoric back and forth. It is opening up. I've talked to, traders, other hedge funds in the space. A lot of people are talking about, maybe starting to sell some of the vol and if we see spikes in oil. But again, back to your question, I think any kind of realistic closure of the Strait of Hormuz is not credible at this point.
What's your thought on gold and silver? Citigroup coming out with a rather pessimistic assessment that oil, it's likely to go below $3,000 US. A lot of the buying has been done.
Yeah, so I saw that. That's pretty pessimistic. I'd be surprised. I think they had a lower floor of 2,500. It's tough to see how we get there. In my mind, a lot of this buying, as we've talked about, multiple times in the show, has been, central bank buying, which is, for all intents and purposes, I was talking to another investor. I mean, you can kind of think of that as, it's kind of, like when Bitcoin's going to cold wallet.